we're not in a recession, and it doesn't look like we'll be in a recession at least anytime soon.
Oil now is the primary driver of the ups and downs in inflation.
Prices go up like a rocket,
Mhm.
come down like a feather. Memorial Day was great if you were out there trying to get deals.
Mhm.
Contrast that with Prime Day or Prime Days
Mhm.
at the end of June. It was kind of a dud.
Right.
I dabble in the aviation world. So I could say they climb like a jet and they fall like a parachute.
Mhm.
Right. So however you want to describe it, it is a known phenomenon.
So as the volatility goes up, the price is going to have to go up
Yeah.
because they're just not going to run at a loss.
Yeah. About me searching for prices and my willingness to search for lower prices when things are relatively stable is a lot less than if they're going up. Number one, people don't search as much when prices are stable or even falling. And number two, there are retailers, gas stations, if you will, that are having to plan for future inventory.
Well, there's also like the degree to which it's discretionary or not. We are living in a time, though, where there's more price transparency than ever before.
And then you're getting consumers who aren't willing to pay full price to actually pay that lower price that you're willing to sell it at, right?
Mhm.
It's all kind of an exercise in price discrimination. And so what we've seen over the past couple months is a bit of an inversion in why market size is growing in the aggregate across our home and tech basket. What that would mean, if quantity is going up versus price, how would that change your focus on your response to changing market size?
So there's definitely going to be like interplay between like amount manufactured and inventory kept.
Yeah.
That's probably the big thing, how they lure them into pay those prices
Yeah.
because, right, ultimately at the end of the day, like we said, it's the weighted average that they're going to pay.
I think the big takeaway from looking at the trends in our home and tech basket is that demand generally is strong.
Welcome to the State of Durables Q3 Macroeconomic Update with our Chief Economist, Ralph McLaughlin. Welcome, Ralph.
Hi, Greg.
Good to see you again.
Good to see you again. Yeah.
It's been a real interesting quarter, data-wise, I think, and world-wise for our customers. A lot of volatility in the energy markets, driven by a number of mostly geopolitical events. As a reminder, OpenBrand is very focused on the durable goods market, and so we're going to be focused today on some of the correlation between energy prices and the price and demand of durable goods. Over the last quarter, we've seen a lot of volatility there. And so as a result, we've also seen a reasonable amount of volatility in the price of durable goods as well.
Truth be told, couldn't have said it better myself. The good news is that I don't think our broader perspective on the trajectory of how oil prices will affect price and demand of durable goods has changed, but certainly the path to peace seems to be volatile. I think we should expect it to be volatile, but also it's important to not lose sight of the overall trajectory. And so far, it seems like the broader trajectory is pretty much in line with what we were expecting.
Yeah, and we said back in April, I think we were looking at the $70 to $80 range for oil. We saw that for a while. Of course, the events of the last couple of days have maybe changed that trajectory temporarily, but we'll talk a little bit about where we see that going and what type of events may impact that in which ways and what that means for our customers and manufacturers and retailers of durable goods.
Looking forward to it.
So before we dive deep into the correlation between energy prices and the price of durable goods and the demand for them, let's take a step back and talk about the macroeconomic environment and the data that we've seen over the last few months and where you see it going. And to start that, let's kind of focus a little bit on growth, inflation, and labor.
So let's talk about GDP. The elephant in the room, of course, is going to be what's happening with GDP. The good news is that GDP has not turned negative. It hasn't been catastrophic. We're not in a recession, and it doesn't look like we'll be in a recession at least anytime soon. And that's somewhat different than vibes that people were getting back in February, March, April. I know we've had lots of clients that were reaching out to us about that time, somewhat expecting a recession on the horizon. That hasn't happened. And there are a few reasons maybe that hasn't happened that we can talk about. One is that the U.S. economy, and in particular, U.S. consumers, pretty durable. So that's been something that's been present in our economy for a long, long time. We're a big country. We're fairly resilient. But there's also some very specific things that happened earlier in the year. Namely, we had a rebound from the government shutdown, right?
Mhm.
And that's going to cause the trajectory of GDP to rise. And that certainly happened in Q1 and in Q2.
Mhm.
And like we talked about in the last session, the last show, we had the impact of the one big beautiful bill acting as a stimulus. And both of those things are proving to help buoying up the economy, at least in the first half of the year. The impact of that is starting to wane. So the real underlying forces or structural support of the economy is going to start showing here, especially in Q3 and Q4.
So you're saying that people spent their tax refund dollars.
People spent some of their tax refund dollars, and that certainly is going to help the U.S. consumer. I mean, the U.S. consumer has been pretty resilient even before the
Mhm.
stimulus. So, like we talked about last episode, that if we get the conflict in Iran mostly sorted out, and it doesn't, sorting out the conflict in Iran doesn't necessarily mean we're having tea with each other across the table
Mhm.
and
Yeah.
celebrating. What it means is that we've reached a more stable macroeconomic environment, even if we're at odds about
Mhm.
how we get to peace. If oil is starting to flow from
Enough oil.
enough oil starting to flow, yeah,
Mhm.
it doesn't have to
Right.
be back to pre-conflict levels, that the economy will probably get back to a more normalish sort of state.
I
And
think I saw recently on one of the betting markets, the probability of recession is now down to like 10% or something, pretty low.
I mean, it's certainly not in our baseline forecast. I think most folks that are in the macroeconomic forecasting space aren't predicting it, at
Mm.
least in their baseline. Downsides, of course, we prepare for, macroeconomic downturns, and that certainly is in our downside forecast. But in our baseline, which is the scenario which we think is most likely, we don't have a recession at all. So that's the good news. So, if the conflict does reaccelerate back to the point where it was 3 months ago, which we don't think that's the case, yes, certainly we could see GDP start to really wane and get back to,
Mhm.
either low growth or no growth territory. But that's not necessarily looking like it is. So,
Mhm.
so there's GDP. So the two of the remaining big three, we're talk about inflation and we'll talk about labor. So the day that we're recording this, we have the BLS released their inflation report this morning. Not a major surprise, but headline inflation was down.
That was welcome.
That was welcome for any of you out there that are, filling up their gas tanks or paying attention to the price of oil.
Mhm.
It's because oil has come down, like you said earlier, we're, in the $70 to $80 range, although I think the last few days has gone up to the mid 80s.
So is it fair to say that oil now is the primary driver of the ups and downs in inflation?
Absolutely. In the headline, both the headline numbers and like we talked about earlier today before the show, how it actually flows through to other goods
Mhm.
is the big wild card, right? And that's what we're eagerly waiting on, the updates to our own data and
Mhm.
other third party data that we look at, because, the obvious thing that we pay attention to is oil and gas prices, but less obvious is, okay, what durable goods or even other goods are going to be immediately impacted by changing oil prices, and then what are the ones where the impact is a little bit more subtle or a little bit more drawn out.
Well, and the timing around that, right? Like, so there's always a lag, right? Even between the price of oil for the barrel and then at the pump. Same thing for input materials as well, I would assume. And so figuring out what the lag is and all of that is part of the puzzle that people are trying to put together.
I would like to say part of the fun or
Okay.
part of the headache, or
People like
part of the
puzzles.
puzzles. Yeah, exactly. If you like puzzles, or
Yeah.
yeah, whether it's fun or not, it just depends on whether you like puzzles. But just as a very brief example, in the report that came out this morning, what's interesting, and some of this could be due to just natural reporting volatility, but even within product groups, like an example is appliances. You look at appliances, you would think most appliances, especially big ones, are going to pretty much move in sync, right?
Hmm.
Like laundry and other major appliances like refrigerators, right, or ovens or stove. That's not necessarily the case. So
Hmm.
what the BLS reported, I think this morning, was that major appliances were, down about 1.3% on a month
Hmm.
over month seasonally adjusted basis. But laundry,
Hmm.
which is kind of a subset, was up like 1.5%. So it's very important, to actually, if you're a retailer or even a manufacturer, it's very important to actually get into the nitty gritty in the details, right? And
Hmm.
that's one of the great things I like about working with our CPI on a
Hmm.
on a weekly basis is that we get that
Totally. Breaking it down by
information.
product type, breaking it down by pricing tier, by brand, all of that. I mean, the devil's really in the details with this stuff.
100%, and even within the other third party sources, it's the same way. So that's where we're at with inflation. The third, last but certainly not least, is the labor market. Do you remember what we talked about back in April about the labor market?
Well, I think that was right around the time the Fed released a paper on the labor market and what they expected to see.
That's right.
I think we also had been seeing a few months of solid labor growth, jobs added, after everyone had sort of said that we were in a doom and gloom situation, which never really sort of came to fruition.
Yeah.
And I think we've sort of bounced around that since.
Yeah, I mean, you hit the nail on the head. I think there was sentiment for a couple of reasons 3, 4, 5, even 6 months ago. The labor market, there's a lot of concerns about the labor market.
Hmm.
Number one, because of any downturn that would be a result of the conflict in Iran, but also number two, AI. Right?
Hmm.
I mean, there's still some concerns, but there's a lot of concerns that AI was going to drive employment lower.
Hmm.
And on top of that, we had the Fed research that
Well,
was
meanwhile, you're seeing, more developer jobs being opened up in the market. You're hearing numbers quoted like 30 to 40 to maybe 50%, sort of productivity boost in them doing their jobs. That's not all of a sudden multiple times better and a huge reduction of jobs. Like that's just not what we're seeing.
not so far, at least. And it seems that AI is augmenting developer skills or augmenting skills of the general public,
Mhm.
not necessarily replacing them. Certainly, in some cases, we may see some replacement, but that's much more in line with how technological advancements have worked over, like, not just the last several hundred years, but over the last, millennia with
Mhm.
respect to technological advancements and revolution. So maybe shouldn't be such a big surprise.
Yeah, it might be a little faster this time, but it's,
I,
still takes time
it's a,
nonetheless. Is
yeah,
companies have processes, they've got security, they've got governance, they've got a lot of stuff to work through with this technology. So it's not like you're going to snap your fingers and then the next minute, all of a sudden, there's multiple 100% increases in productivity.
yeah. There's certain things, you're exactly right. Certainly things that are a little different with this
Mhm.
technological revolution, but I think it's feeling like there's more similar to past, even though there are differences. So yeah, I mean, the labor market is not faltering, at least by any means. Last month was less than expected, but still very positive.
Mhm.
And we've seen over the last several months, employment increases in, the low five digits up into the
Mhm.
six digits.
Right. And
So
let's not ignore the natural sort of like demographic shift that's going on too with people leaving the labor force due to age.
yeah, yeah. So the unemployment rate is not going up;
It
it's
went down.
stagnant, going down, and partially because some people are leaving,
Mhm.
the labor force. The folks that just, I'm ready. This time, I mean it. I'm retiring. Right? I think I'm
Yeah.
retiring for the sake.
I want to
Tom
retire.
Brady.
I
Yeah,
want to
yeah.
retire.
I want to retire. Yeah, exactly.
Yeah.
Yeah, yeah. Enjoy retirement.
So we talked about the big three drivers of the economy. So let's like now take more of a drill down approach and let's focus on inflation specifically. As we previously discussed, inflation right now is primarily being driven by the price of oil. And so as oil ebbs and flows, no pun intended,
Oh,
right?
definitely pun intended, Greg. Definitely pun intended.
How are our customers, durable goods manufacturers and retailers affected? And, what does that mean for how the US consumer is feeling about the price of these goods?
Interesting.
And also, right, like their willingness to buy them.
Yeah. Well, importantly, yeah,
Right.
based on prices and their expectations of the future. Even if we aren't out there directly buying a barrel of oil or even buying a gallon of gas,
Mhm.
there is flow through, pun intended,
Right.
flow through down to the costs of the things that you and I buy, consumers buy on a monthly, weekly, daily basis. And interesting phenomenon is that prices tend to go up much more quickly than they come down. The analogy in the economics world is that prices go up like a rocket They
Hmm.
come down like a feather. We can adapt that a bit. I dabble in the aviation world. So I could say they climb like a jet and they fall like a parachute. So however you want to describe it, it is a known phenomenon. And there are some reasons why, very benign reasons, but also maybe some less benign reasons why that's the case. So I think it could be interesting for us to maybe talk about that phenomenon very directly, about correlations between like price of a barrel of oil and then what we pay at the pump, and then talk about, okay, how much of that phenomenon or the reasons why that phenomenon actually occurs trickles over to the durable sector, how much of it trickles
Hmm.
over and how much of it doesn't. So
I assume there's a lot of like psychology and behavioral finance around this, right? People's expectations sort of level out. And so the companies that are making the product sort of feel less pressure to reduce the prices super quickly.
that's right. Part of that is if you walk into a store and you see sign up for our members discount or something like that, and you get 5 or 10% or 15%
Mhm.
off. And I remember walking into a store not long ago where I actually didn't have a card, but I signed up right away for it to get the discount. And I kind of just casually asked the clerk. I was like, "How many people come in and like don't care, and they just pay?" They're like, surprisingly more than you would think. And said,
Mm.
why is that the case? It just kind of looked at me like I was an idiot and said, well, because not everyone cares about price. And so, part of, I think, the, trajectory, at least when the input prices of things come down or go up for that matter, is that people are more sensitive to prices increasing than they are coming down. In other words, no one likes paid more for stuff. So if they go
Mhm.
up, people are going to shop around real quickly. But producers or sellers of things are not just trying to pay for what they bought and sold you. They're also thinking about paying for the next lot of stuff that they have to put on the shelves.
Mhm.
And gasoline is kind of that. So that's a pretty benign reason why they would go up really quickly.
Well, the producer especially is going to be even more sensitive to price increases, right? The business will be more sensitive to price increases than the consumer might as well, right?
Well,
Because they don't want to run at a loss.
they don't want to run a loss, and there is uncertainty about what the cost of their next batch of things that they might have to buy.
Right.
And that loss can immediately come from overpaying for something
Mhm.
if the price comes down by the time they sell it. And there's going to be that mismatch
Mhm.
between what the consumers expect and what suppliers actually bought. So you said it correctly. It's a timing issue, right?
Right.
It's a timing issue in a lot of
But the price is always
instances.
going to take into account the volatility of the input materials, right? So as the volatility goes up, the price is going to have to go up
Yeah.
because they're just not going to run at a loss.
Yeah. But if you think about what's interesting is on the way down, that doesn't necessarily happen. And the other day we were talking about it. I mean, and you've, I think hit the nail on the head. What was the lag you talked about between
2 weeks.
about 2 weeks?
I
Yeah.
mean, traditionally, it had been about 2 weeks between the price of crude changing and what happens at the pump. And I think, I, as a consumer, right, I go to the pump, I see that it went up. I'm annoyed. I go back 2 weeks later, it's the same price. And I'm like, "Oh, okay, nothing changed." Like, unless I'm following the price of crude oil, which is probably a small minority of people, truly, right?
Yeah. Yeah.
I just kind of think like that's the new normal and I move on with my life. I mean, there's obviously some threshold where it gets so high that I'm like just waiting for it to go down again. But I don't have a lot of optionality here. Like if I need gas to fuel my car to go to work and drive my family around, like I need to buy the gas.
Yeah. Yeah.
I can maybe try to find a gas station that's a little bit less, and some people have that optionality, but there's not a lot you can do.
Have you ever used Gas Buddy?
Yes,
Yeah. So, I think about this, and I've used Gas Buddy too. I've only used it when prices were going up. I
for
never
sure.
thought to really use it when like things settle out. I never thought to use it.
Hmm.
And I think it may be more reflective of how more broadly society uses pricing or actually does a price search. Really, me using Gas Buddy is not about using Gas Buddy or promoting Gas Buddy because we're certainly not. But it is about me searching for prices
Hmm.
and my willingness to search for lower prices when things are relatively stable is a lot less than if they're going up. That's part of the two phenomena. Number one, people don't search as much when prices are stable or even falling. And number two, there are retailers, gas stations, if you will, that are having to plan for future inventory. And that planning, they're going to be a little more risk averse and maybe err on the side of, charging a little bit more, keeping prices higher if they don't know what the price they're going to have to pay is in 1 or 2 weeks, right? I mean, you just
Right.
lost.
Well, just remember the margin on a gallon of gas for a gas station is like a penny probably or
Yeah.
something.
Where do they make all their money? Yeah.
Yeah, it's the food,
Yeah, it's the food. It's the
the
concessions. It's the
snacks.
coffee. Yeah.
Yeah.
What's interesting though is when you start thinking about, okay, how does that analogy play over the durable space? I think there's some very fascinating nuances that, to be very blunt, I don't think anyone really has all the answers for because there's so much variability, and durables is a very broad. I mean, you get durables on one end, like cars that people buy once every, I don't
Mhm.
know, 6, 7, 8, 9, 10 years. And then you get other durables that are just barely eking in, durables that people might replace, like, AirPods or something. People might buy them every, 3 years,
Yeah.
or phones every 2 or 3 years.
Well, there's also like the degree to which it's discretionary or not, right? Like, so your fridge breaks, kind of doesn't matter. You got to go out and buy a new fridge because you need food.
Yeah.
If your leaf blower breaks and you're not a professional, you might be able to wait. You could use a rake. Like,
Yeah.
it's possible, right?
Yeah. It's also different now, I think, is how competitive price discovery is, or how easy it is for consumers to initiate price discovery in the durable space. I think when we were younger, maybe you would open up the Sunday newspaper and you get all the ads for, Best Buy or,
Mm-hmm.
wherever. And now, you can just get online real quick and do searches, and, it's much easier. So in that way, I think there is quite a bit more competition. So on one hand, it might mean that, retailers especially have to be, pretty competitive, especially if, their input prices have come down because people can shop around real easy. They're not just going to pull into that a gas station that's on the right-hand side of the road on the way home because they don't want to
Yeah.
make a left turn or a U-turn. But in other instances, fridges, maybe they don't have to be as competitive. So yeah, so interesting analogies here.
We are living in a time, though, where there's more price transparency than ever before, right? Whether you're using an LLM to search all the sites or you're going directly to a retailer or even some of the manufacturers themselves provide price discovery for the retailers that carry it in your area. So,
And those pressures, I mean, I'm not just talking about over the last 3, 4, 5, 6 months. Those pressures have been there, especially on the appliance side, for years. I mean,
mhm,
if you look at the consumer price index of appliances over the last several years, it's really, really started to come down, and to the point where
mhm,
it's often more negative than it is positive. And I think that very much reflects the ability to discover prices.
right. I mean, just before the tariffs and all that, we were in a deflationary position.
Yeah. And then that bumped it up a bit.
So Q2 saw two of the most important discounting events of the season take place. It was a little bit of a tale of two cities with that. We had Memorial Day, which is the traditional kickoff to the home appliance discounting and promotional period. And then we had a pull forward in June of Prime Week. And so we saw kind of companies and brands take a little bit of a different tack for each of those. And as a result, we saw consumers behave differently. So maybe you can kind of take us through that a little bit.
Sure. There's a lot going on. Even if there weren't a conflict in Iran and energy prices going up or down, there's still a lot going on during this period. So, we could take a minute to dissect all of the moving parts. But at a very high level, Memorial Day was great if you were out there trying to get deals.
Hmm.
Contrast that with Prime Day or Prime Days
Hmm.
at the end of June. It was kind of a dud.
Right.
And we can talk a little bit about the specifics of those things in a minute. And there are some reasons why that may be the case. Your energy prices really started, or the potential impact of energy prices flowed through in a lag way, maybe more into June
Hmm.
than in May, based on when producers were making things and
Hmm.
retailers were buying them and selling them. But
Or,
also
or trying to get ahead of the curve on the price. And
trying to get ahead of the
right.
curve. Exactly. You've hit the nail on the head. And the other part is discounting theory with respect to retailers using discounts to cushion the impacts of prices or being able to give them wiggle room in pricing
Hmm.
without having to adjust, the MSRP. But second, more of a fundamental approach of discounting, which is when done well, you're getting the consumers who are willing to pay full price to pay full price.
Hmm.
And then you're getting consumers who aren't willing to pay full price to actually pay that lower price that you're willing to sell it at, right?
Hmm.
It's all kind of an exercise in price discrimination.
Right. You're optimizing the weighted average price paid. So you get the most number of
You said
purchases.
much more eloquently than I could have said
Mhm.
it. Right? Yeah, yeah. So what we saw in May was pretty heavy discounting to the point where it actually lowered our CPI to where it was essentially flat in
Mhm.
May over April for durable goods. Discounting was pretty widespread,
Mhm.
and you had a lot of retailers that really upped their game compared to not just the rest of the month, but the prior year. In June, it was almost exactly the opposite. In that 4-day window for Prime Day, it didn't see a lot of activity. And it wasn't just Amazon, but it was other retailers that didn't really change their discounting much from the rest of June or compared to the prior Prime Day period, which was in July of last year. So
Mhm.
there could be a lot of things going on. Maybe consumers weren't necessarily ready for a prime discounting period at the end of June, which traditionally, was in July. The last time that was in June was like 5 years ago.
Right.
And I remember you mentioned to me last week, I think or the week before, you had bought some stuff and got some deals on Prime. I mean, I was monitoring it, of course, for our CPI, but I personally like it kind of just I was busy doing a lot of other things. So that could have played a role if I behave like some other folks getting ready for the 250th anniversary of our country,
Yeah.
maybe getting ready to go on vacation or go on holiday, and you just kind of missed a bit.
Yeah. Well, you have me second guessing the deals that I think I got.
But did you get a good deal?
I think I did.
Yeah.
Yeah.
Anything?
Well, I mean, I bought a new Dyson air filter for my house
Oh, good.
and I got
Yeah.
a pretty solid price on that, I think. And so I was happy with it.
Yeah.
I think the other thing to just talk about a little bit with respect to Prime Day is it's not all about Amazon anymore,
Right.
right? So I think there were like at least four other retailers that kicked off some sort of promotional period over those 3 or 4 days. Might there be a little bit of head fake strategy involved here?
There could be. We absolutely did see some other retailers that had increased their discounting activity. I think Walmart continued to be one of them, and others. I know Walmart's been trying to go head to head with Amazon, but it could be that there is also some game theory strategy that's
Hmm.
happening amongst Amazon. I mean, Amazon has very, very bright people working for them and trying to figure out pricing and discounting strategy. And the move back to June could potentially be a head fake, like you mentioned, where they're going to try to. Maybe it's a period that they know that there isn't going to be a lot of activity. It's been 5 years. And so they'll announce it to try to get their competitors to put all their effort into discounting and promoting things during that period, when in actuality, their real discounting period might come last minute in July. Like it could be, that there's a flash sale that they have, they announce it, they can get ahead of their
Hmm.
competitors because it takes time to plan for these things, and that they can capitalize that way.
Or maybe they're saving it up for big deal days later in the year.
It could be, yeah, it could be, yep, coming in the fall. Maybe they're going to
Hmm.
wait and put their big promotion, big efforts into that promotion period in September or October. So, it's tough to tell exactly what's happening, especially when the impact of oil prices is lingering in the background,
Hmm.
right? But ultimately, it could also be, down to fundamental discounting strategy, which is if retailers and manufacturers think they can get that new customer to come into their ecosystem or come into their product line that they wouldn't normally get by discounting in May,
Hmm.
they'll do that, but hold back on discounting at the end of June because they think their normal customers would come in and pay full price.
Hmm.
So there could be some of that going on in the background as well. But it's certainly been a very interesting, nice kind of natural experiment, if you will,
Hmm.
because they were about, a month apart and two totally different outcomes.
And we have some early data, I think, on CPI that we just calculated for the month of July.
Yes,
Do you want to give people a little bit of a
a little bit of a taste.
little taste?
Yeah, there's a couple things. We talked about CPI and then also our consumer survey that we had
Hmm.
run some interesting findings there. So I'll start actually, in reverse order. The consumer survey showed some interesting stuff that there was a decrease in the percentage of buyers on during Amazon Prime days that were actually aware of the Prime Day.
Mm,
That's down. It's still high. It was, I think last year it was in the 90s, and now it's down into the 80s. But we see that trajectory fall. So there was less folks that were actually aware
mm.
of Prime days or Prime week in June this year than they were last year.
So perhaps it was not as highly promoted,
Not as highly promoted. It was announced, not as highly promoted, maybe as it was.
or maybe this fatigue.
Yeah.
People are just used to it now. Oh, another one of those.
Yeah, another one of those. Yeah, it's like, oh, you get a discount. You get a discount.
Yeah.
Everyone gets a discount,
Yeah.
right?
You're always getting a
Yeah.
discount. There's always a reason to give someone a discount.
And so maybe it is that fatigue, and,
Yeah.
and folks are like, oh, okay, well, if I know there was a discount last month and there's a discount this month, there's going to be one. I'll be able to get it on sale
Yeah.
eventually. But what's interesting to your point here, we did just run our CPI nowcast for July, for the first 10 days of July. And the spike that we saw in June is actually come back down again. It's still running at a faster rate than what I would consider to be healthy. It's in, on a seasonally adjusted basis in the mid point fives, and it's like 0.5, point 0.4, but that's down from nearly 1%.
Hmm.
And the decrease is across almost all of the product groups that we cover. So not just appliances, which has already been on a downward trajectory, but the rate of increase has been down amongst home improvement and amongst communication and amongst recreational goods. So it is all starting to.
Let's not forget that Apple had a huge price increase announced in June. So
They did, and it went into effect right away.
mm,
So that probably helped bumped up, several of the categories, because Apple products span both communication and phones, but also recreation headphones.
mhm.
So it's going to buoy up those categories, and computers as well. So again, it's only the first 10 days of July, and there can be things that happen again, and we're seeing oil prices come back
Seems like there are things that are happening every single day now.
every single time. I was hoping this was going to be a nice kind of calm, collected, okay, things are back down. It looks
Yeah.
like they're going to stabilize, but what a time to be alive for a forecaster, an economist,
Right.
and a CEO.
There's certainly no shortage of current events to navigate.
No, it seems like we're sending each other messages every week about, trajectories of things changing. So it's good. Keeps us.
And for our audience, like we basically had to change a lot of what we were thinking about talking today last night
Yeah.
based on things that were happening.
Yeah.
And this morning.
Yeah, we prep for this call. You can't prep too early, or you can prep too early, actually.
Mhm.
You can't prep too late, I guess, is the point, because
Yeah.
even reading through releases this morning, it's like, okay, all right. And then by the time this is released, it's possible things have changed a bit, but fingers crossed.
We're only doing what we can do.
But we're doing what we can do. That's right. That's right.
So as most people know at OpenBrand, we talk a lot about why brands and retailers are winning and losing market share. But just as important with why things are happening is understanding the base case of where you stand and what's happening now. And so to do that, Ralph, you put together the OpenBrand BEA Home and Tech Basket, and that helps our customers really understand the overall size of the market and how much it's growing, right? So that they can get a better sense of how much the magnitude of what they want to invest into that market on a product by product basis.
That's right. We have a lot of demand, both from manufacturers and retailers, and understanding addressable market size, and not just the total addressable market size, but also trends in
Mhm.
the total addressable market size. And what's important to know is, when you're thinking about why things are changing, market size can change for two reasons. One, it could change because the cost of things is going up,
Mhm.
or it's going down, depending on whether the market size is going to go down. But it can also change because people are buying more of
Hmm.
one thing and less of another, or more of everything or less of everything. It's
Hmm.
a combination of interplay of price and quantity
Yeah.
that determines that market size. And so, what we've seen over the past couple months is a bit of an inversion in why market size is growing in the aggregate across our home and tech basket, which is derived from BEA reports of what people are actually spending their money on. And back in April, we saw the total addressable market size in our home and tech basket to be about $340 billion.
Hmm.
That was up by about 1% on a seasonally adjusted basis from the month prior. But most of that growth, actually, majority of that growth, over half of that growth, was actually from people buying more things. It was
Mm.
quantity, right? So the addressable market size is growing because people are going out and buying more stuff.
Right.
In May, it still increased. It went up to 350 billion, so
Mm.
up by 10 billion. But much of that growth was actually from price.
Mm.
So it was from prices actually, um, going up, or people spending their money on things that were more expensive. Right? It doesn't necessarily mean that prices are aggregately going up, but it could mean that they're buying more expensive things.
Maybe that was due to their tax refund check.
It could be because they're buying more bigger ticket
Mm.
items because they got that refund. They can go buy that fridge or that more expensive fridge than they might otherwise would. So what's actually interesting is when you start breaking that growth down by different product groups, we do see interesting trends. So if you look at dollar drivers, at least especially in May and even into June. Early reads on June are suggesting that's the case. It was computers, tablets, and peripherals that were the big dollar
Hmm.
driver, and that a lot of that was because the mix was higher priced. And you alluded to earlier that
Hmm.
manufacturers like Apple were raising their prices because their input costs went up.
Hmm.
I don't think it was just limited to Apple. It was probably other manufacturers that had to raise their prices. But if you juxtapose that with other product groups or other categories, particularly like TVs and outdoor equipment, those showed much heavier quantity growth. So, in other words, people were going out and buying more
Mm.
TVs or buying more outdoor power equipment as opposed to just buying more expensive things or buying things that were more expensive than they had in the past. And what's interesting is that when you juxtapose those two things, if you were selling goods in those space, it really matters for strategy.
Hmm.
Right. And in fact, you would know this better than me as a CEO, as our leader of our company. In some ways, it means you're our head strategist. That matters. So it'd be good to get, I guess, your take on what that would mean. If quantity is going up versus price, how would that change your focus on your response to changing market size? If your market size of what you're selling is going up because of things being more expensive. That
Well, I mean, I like there's like implications to like supply chain and inventory for sure, right? Like I'm not necessarily going to be going out and manufacturing quite as many items, right? Because I don't want to have too many and then just drive down the price, especially if people are still buying it at that high price. Because we talked about that before. We want to sell to everyone who's going to buy full price and then try to capture some more people at whatever our acceptable margin is down the line. So there's definitely going to be like interplay between like amount manufactured and inventory kept. That's probably the big thing. I mean, I also think about some of the macro forces at play, right? Like if the housing market is taking off and all of a sudden there's a tremendous amount of manufacturing, like that's going to drive a lot of durable goods purchases.
Yeah.
And so we're going to, as a manufacturer of those things, we would want to get behind that, right? And we'd want to get ahead of that. And we might start manufacturing faster and faster to build up our supply chain.
Yeah. And the housing market is a great example is pretty much in a lull right now. So you're not getting, the transactional led volume of appliance purchases, as an
Hmm.
example, that you might get in a time when housing transactions are going up. So if it's, moving because of prices,
Hmm.
I mean, I would think, manufacturers and retailers got to really pay attention to how they manage prices, like the prices that consumers are actually seeing because of potential fatigue.
Well, and how they lure them into pay those prices
Yeah.
because ultimately, at the end of the day, like we said, it's the weighted average that they're going to pay. Maybe they're going to do more bundling of items
Yeah.
to drive up that weighted average. You're getting this great deal on one of your three items, for example, and that's enough psychologically to draw you in to make the
Make
purchase.
that purchase.
Yeah.
And on the flip side, or the counterfactual would be, okay, what if housing transactions are really going up and people like just need to get appliances and they need to get them in their house, whether it's a brand, like new construction or an old
Mm-hmm.
house, you need to get appliances in, like you have that demand. And maybe some of it is going to be, everyone to some extent is price sensitive, but, you know, as a manufacturer retailer, if people are going to be coming and buying stuff because they're buying, things that are related to them buying like your goods.
Well, there's a lot of correlation between some of these products.
Yeah. You might be just like, I need to have products on the shelf in places where people are going to buy. I just need to get it out
You
there.
just have to have something.
Maybe it's where it sits. I need to focus less on price, but more where it sits in the
Or
store.
focusing on the item that is the key item that actually drives the person to come in and buy. Because
Yeah.
once they come in and buy for that item, they're going to buy other items.
Yeah. And people like to match too. Like, you talk about ecosystems. My better half likes to have all of our appliances, even though it's not the case now, but all of our appliances, the same brand,
Hmm.
same line. I think you talked about some of the things that you'd bought this spring for home improvement, right? I think one particular brand, and I did the same because I knew all the batteries were interchangeable.
Right. It's a platform.
Yeah,
play
it's
for
a
them.
platform.
Well, I think also is, even in a lot of these spaces, especially home appliances, whether they're major or small, right? They're embedding a lot of technology into these things, right? A lot of AI,
Yeah,
if you will.
yeah.
And so having the interoperability is becoming more interesting for consumers. At
Yeah.
least that's what we were seeing at CES.
Yeah, and it was feature driven, right? See,
Yeah.
it's CES early this year. Your big takeaway is it was feature driven. It
Mhm.
was democratizing features, and that continues, I think, to play a role. To your point. So I think the big takeaway from looking at the trends in our home and tech basket is that demand generally is strong. We are seeing quantity growth. Even last month, when quantity growth took a back seat to price growth, we're still seeing individual product groups that are being driven by quantity growth.
Mhm.
So demand is generally strong. Consumer activity and spending is supporting the U.S. economy in a genuine way, not just driven by inflation. It's driven by real demand
Mhm.
for stuff, and that actually bodes well for the future of the U.S. economy when it comes to expectations of growth here in Q3 and Q4.
So we've spoken a lot about kind of what's happened, but everyone wants to know what's going to happen, right? Ralph, what's your crystal ball
Crystal ball
telling?
time. Okay.
Please,
Here's a
please.
crystal ball. We're not going to go into a recession, at least anytime soon. Recession, yes, not going to hit because of the conflict in Iran or because of
Mhm.
AI, although we may see a gradual slowdown in GDP growth because of the stimulus that
Yeah.
we had in Q2 is waning, and because the rebound from the government shutdown last year is waning, but it's still going to be buoyed up by this really awesome technological advancement, which is the growth of AI and its adoption throughout. That's going to continue.
Mhm.
That's going to help keep the economy buoyed up.
So a productivity story.
Productivity, yep, a productivity story, absolutely. So we're expecting GDP to settle down to around the mid to high ones or low twos, at least through the end of this year into next year, and that really hasn't changed much. We have some upside risks here in the GDP, which is a resilient consumer, and the potential for the housing market to rebound. And that is a good segue into talking about the housing market, which drives consumption, a lot of durable goods. Housing market is still reeling. It hasn't changed a lot, partially because rates have not come back down. The impact of rates on home buying activity becomes less important the longer rates are high. And we've seen this, it's not like
Because people just need houses
people just need
sometimes.
housing. Like,
Yeah.
it turns out like, I need a place to live. You need
Mm.
a place to live. So even though housing transactions are still around the 4 million mark, we think there's upside, even if rates don't come back down to where they were, 3 or 4 years ago. People are just going to like stop caring, not stop, but they're going to care less about rates, and they're going to care more about the new jobs that they got in another town or the other
Mhm.
side of town, or they want to move closer to their children or move closer to their parents or vice versa. And that's still going to keep a relatively decent floor which means that people are going to still buy durable goods. But it also means that if transactions are still relatively low by historic standards, you get a different type of consumption for durable goods in that it's less transactional based and more based on, say, remodeling or
Hmm.
renovation or repairs. So that's important to take into account when you're thinking about the trajectory of not just where the broader economy and housing market goes over the next 6 to 12 months, but types of things that people may be seeking to buy.
Well, and some of that is also driven by like the rental market as well. Like when this renter turnover and there's sort of the sprucing up of units, so to speak.
Yeah, if there are policies at play now that are potentially reducing or throttling back the number of current renters or future
Hmm.
renters, and that might mean more transactional activity in the rental market.
Hmm.
Those that are in the investment game in housing, may find that as an opportunity to improve the quality of the units. Maybe try to go up market, go from like a C class to a B class,
Hmm.
or try to overall make their units more appealing and buying things that would help make those units more appealing. On the flip side, maybe renters, if there's more vacancy, they may choose to try to step up their game and go from a C class to a B class.
Hmm.
They might buy all the things. They might suddenly have a small yard instead of like a yardless apartment,
Hmm.
and that means they might buy a barbecue or things like that. So I think we might be on the precipice of seeing those sorts of qualitative changes
Hmm.
in the types of durables that people are buying in either the rental market or the other occupied segment of the housing market this year into next. And then last thing, we've talked about inflation. I don't want to beat a dead oil barrel, but we have the trajectory of oil that we think is going to continue to come back down.
Hmm.
As a result, we think inflation will come back down. I generally think we're pretty much, like, at least in this short term cycle, past peak inflation. I think that maybe hit in May and into June, but we still may see the residual impacts
Hmm.
of that barrel of oil going up, affecting the price of things that we actually pay for, especially in the durable goods market that take a while to manufacture, take a while to distribute, and take a while for people to buy. We still are likely to see volatility here through the remainder of the year.
Right. The
Uh,
straits open, the straits closed.
yeah,
Straits
so the
open, the
strait's
straits
closed.
closed.
Now oil's getting out, in other, ways that isn't the straight. But
Hmm.
unless we have other major changes, all else equal, we expect a little bit more stability on that front going to the remainder of the year.
Great. Thanks for joining us for the State of Durables Q3 Macroeconomic Update. If you want to get monthly updates, you can subscribe to Ralph's newsletter, The Durables Brief, to stay up to date. Thanks again for joining, and stay durable.